Hey guys, we will come back. Today we will work with corporate finance, and you can call me and you can call me Mia. It's okay. I graduated master degrees in finance, and I'm here today to willing to share with you some overall about the corporate finance. And now let's begin. Mm, how about the different finance and economic? I think the finance we will consider about the how about the capital located. How about this time for time consuming for the decisions efficiently. How about the uncertainties of the inside factor and outside factor, internal and external factor. The economics you will work with theories, basic theories in matter, math for you apply math and have a math, yeah, you how to allocate the research efficiently. So when you are studying about the corporate finance, what do we do? The corporate finance, you can it means you can you have the short-term investment in the projects, and you can how you can invest in the real asset and which optimize the revenues, optimize profits. The corporate finance will answer your questions. Financial asset like in capital markets like you can buy the stock and bond in capital market, and how many you can buy, and when you must buy, you must sell them in the capital markets. Another hand, the short term in the financial financing decision. So finally, you can separate two aspects in the corporate finance. This is the capital budgeting. How about the optimize the budgeting in your companies? And how about this finance decision when we sign this the project, and you have the loan, the debt for the project or not, and how much how many percent of the loans for the project or something like that. And how about the goals of the corporate finance? I think first of all, almost the company in the world, they will consider about profits when yearly profit, um, in the financial statement, in the financial statement, the like the stakeholder will investor will concern about profits. And the financial bucket I just mentioned in the previous slide, the market share. In the market share, you can you are in the you are public companies, you are in the market share, and you must to control your stock, your bonds, and facing the matters when the stock price going down, and when it going up, you must to some happens. The capital structures, this is very interesting topic. You can try out the topic when you want to research capital topic, like in the companies, how many loans and debt leverage you want to use in your company, and the debt and the equities matter how much, and the time for this. The I mean the corporate finance, they so concerns about the time controls, because for the long time this is the benefit for your project, but maybe in the future the project it cannot launch due to the internal outside, like the increase in interest rates of the government or the bonds or the bank, sorry, the leverage, leverage, how many leverage for your company, uh, in the short term, in the long term, for each projects, um, for the long-term tariffs, and Spain is a higher definitions for the cost, the Spain on the company how to optimize the Spain, but the quality of product still remain, and higher lower Spain, but higher revenues and higher profits. This is the good subject you can in the not only in the theory, but also this is in the real times. And I introduce two pillar, two side in corporate finance. First, the firms and the outside the firm. So the firm will inside the assets, and will invest in the assets, maybe the current assets and the fixed assets. This is total the values of the firm assets, and maybe they will based on the financial markets, like uh, like this security, and maybe they will use the short-term and long-term debt from the bank on the sponsor or the stakeholder. And how about the equity share will also pack on this firm's value sets, like the equity share, that is how this dividends and the debt payments of the stakeholder also will pass on the firm, and the government of the cash flow from this transfer to the cash flow by this investor will transfer the cash flow to the invest in the firm assets, and the return is cash flow, like after you after you pay the dividends, after you share the dividends for dividend share for the stakeholder, you also have the little bit money that is retain this cash flow. You will use this for the invest in the firm, invest in the assets of the company. The firm issue security, I just forget. Like the bank, the companies can use they can issue the security, like the bond company to attract the invest in them, invest in them by projects. Okay, something for instance, this is the points of company. And how about the investment decision? When the companies have any project, they will think the CFO will think about the investment decision. We will compute the time value, present value, future values, equity of the project. we must to we must to estimate the project clearly to have the deep inside project and benefit of the project in the future will bring up to the company, and the outside and inside factor like the valuation. Outside multiple valuation, current yield, ETM yield curve, stock valuations in the market, and just some ratio I mentioned here. Valuation inside like the capital structure capital bucketing, NPV net present values are IRR, MRR, and payback barriers. Very this is so important thing when you before you sign this project in the project for a company. Financial decision, think about the risk, the campaign to estimate the real equity cost for your companies. PACC try to compute the PACC capital cost and the discount rate in the investment decision. Capital structure, how is the financing decision, including the firm values, how many is loan, optimate the loans for the project companies. And this is some corporate some research topic for corporate finance. I suggest for you that you can work with financial risk management, maybe broad industries, special industries, some hot topic some hot topic now they people try to have deep insight in financial risk management in the bank sector or financial company, capital markets, financial institution, teaching also the hot topic because the increase the volumes of the companies and the values of this time companies like AP one of the biggest financial institution in the world. Emergency markets. I think the emergency markets, which are big names. Come from Vietnam. Yeah, I just mentioned Vietnam. Thailand, China, India, because Asian is in one of biggest economic areas in the world, and will impact on the economics of Asia, will impact on the rest of the world. But the number, the figures of the economic, this is not clearly. It doesn't like the figures in the UVCs or UK. The figures this will publish. It is published on the website. You can just clearly, clean and quickly. But this different in the emergency market. Public debt management. market value to capital ratio, market value to net present capital ratio. We also had find the difference between the NBA's and market reconciliation, define assessing NAV, exploring market value reconciliation, identifying fundamental difference. So before the last page I will introduce to these two books that I love, that I recommend you can read these books. One of them is a fundamental of corporate finance from Marius, one of the most reputation university in Canada. They also have the newest edition. You can buy it on the Amazon's website. After that, you can read the corporate finance from this person Australia. I think this enough today. For the next topic, I will introduce more thing and deep insight in international in the corporate finance, and yeah. Thanks for listening. If you have if you can find this book, please tell me in the comment below. I will send to you this book via your email address.